Welcome back to Everything Money. In this video, you will learn about JD.com and Alibaba. Both Chinese companies had earnings reported recently. We will certainly discuss. We'll go over the financials about what happened and what you should do moving forward if you want to invest in both of these. We will use our stock analyzer tool to make some predictions moving forward about what you should be paying for both of these stocks. And if you're looking to trade either of these stocks, we will head over to Mo and he will show you all the trading charts and trends. But first, why should you watch this video? I bring your questions about these Chinese companies to a couple guys that own and operate over $100 million in Caribbean homes, multiple businesses, and stocks. And they'll give us a mindset about investing in a couple companies that are currently going down on that ticker symbol. This is good news for us as value investors. We'll show you why. Paul, let's get after it with these two companies.
Thank you, Seth. Please follow us on Instagram, Everything Money Investing. It's our new Instagram account. And then follow us personally. So what's my go-to line?
Our mothers love us more.
So I can get more side pieces.
Go ahead.
Okay, so we're talking about JD.com. JD, from what I'm seeing right now, it's the real competitor to Amazon. They're really trying to be the Amazon. Alibaba has the rep of being the Amazon of China. But Alibaba is doing a lot of sourcing. JD is actually like doing third-party marketplace now where third-party people are to come on. Because what you don't realize on Amazon, a lot of people don't realize, when you go there, you're buying from like a third-party company usually. You're not buying from Amazon very often. You're buying from a third party. So JD's trying to do the same thing. JD's revenue over the next 3 years is expected to grow 29, 22, and 19% to hit $181 billion in 2023. Earnings per share is supposed to be $3.15 by 2024, which is a 54% growth. No, it's like 100% growth or something like that over the next 2 years. It's incredible.
Paul, I had no clue. 550 million plus active customers, 1,300 warehouses, 115 billion in 2020 revenues. We'll show you the new ones now.
Holy cow.
Crazy. Wow.
All right, so let's go to Everything Money software. We're going to click on the 8 pillars tools, JD. Click on it. All right, max chart. It IPO'd around $20 and it's currently at 86, and that was 10, not even 10 years ago, 7 years ago. It hit a high of 106 in February of this year, hit a low of 64 in August of this year, and it's back up to 86. So guys, look at that. That's a drop of 40% that it did in a matter of 4 or 5 months. So keep in mind that when you say to us, oh, stocks are going to fall 40%. Remember, they had the big China scare of the government's going to shut things down and fine them. By the way, China fined Amazon, Alibaba about $2.5 billion. JD was only fined around $50,000. So I don't know what the reason for that is, but it's a lot lower for those who can't do the math. 50,000 is less than 2.5 billion.
Thank you.
This is what we learn on the Everything Money channel. Stick around.
Is that in yuan or dollars?
It's in dollars.
Okay.
Even if it's in yuan, I don't even get what that means. Market cap, $134 billion in the company.
Things to Paul because he takes them so literal sometimes.
I mean, Mo with the zinger over there. I mean, this is rare for him.
I get worried about the, anyways, go ahead. First pillar is we want a 5-year PE under 22.5. Guys, this is almost at 70.
Yay.
That's an X.
Oh, no.
Now, does that mean we hate it? No, because this company is growing like crazy. If a company can grow 50% a year for the next 10 years, would I be willing to pay 70 times profit? Absolutely, I would. Absolutely, I would. So let's keep that in mind going forward. Pillar number 2, we want the 5-year return on invested capital to be greater than 9%. Mm-hmm. It is 8.7, so it's an X, just barely. So we have 2 X's to start, no dividend. Seth, look at this 5-year free cash flow, $3 billion, and last year it did $6 billion. So free cash flow is definitely increasing. Pillar number 3, we want the revenue growth coming in hot, and it's coming in hot. $48 billion to $134 billion. Wow. And guys, I believe this is all organic. I'll have to look at the cash flow statement. So let's go to the cash flow statement real quick. Go down, let's put on annual for Chinese stocks, and let's go to acquisitions. Oh, no, they have some acquisitions, not a couple of big ones in the last few years. Okay.
Paul, Amazon's ROIC is 5.5%. So
yes,
a little
true.
higher. Keep
so
going.
It's better than Amazon's. Pillar number 4, we want net income growth. So we go back to our income statement. We scroll a little bit to the middle. How do you scroll a little bit to the middle? Minus 400 million to a positive 5.7 billion.
Sounds good.
I mean, look at this, Seth. They just, every single year, it's like getting better and better and better now. That's great. Mm-hmm. Pillar number 5.
Shares outstanding.
So I have no idea. I'm not going to scroll down. Oh, Mo, you already looked. I already looked. So I'm not going to ask him. What do you think the shares outstanding are doing?
This one's tough because it's weird. These weird sanctions they're putting on, and
I
the
don't think
huge
I can do
price
that.
decrease. Well, no, the price decrease in the stock.
Oh, that, yes.
What would your guess be?
I don't think foreign companies are as big on buying back and issuing shares as we are. So I'm going to say it's probably pretty similar and pretty much the same. Like Alibaba is the fluke of it, where they're like, we're going to buy back a ton of shares. So I'm going to say it's pretty similar. Okay, it's up a little bit. We go to the very bottom of the income statement. It's actually up 1.42 billion to 1.55.
And if you look at 2013, it was at 1.46, dipped down, came back up.
Yeah.
So,
Okay, so maybe they're taking advantage of their really expensive stock price and issuing some shares to go finance their growth.
Pillar number 6 is about their long-term liabilities and their debt. Go ahead, Paul.
So we go back to the metrics page. We scroll to the 5-year average free cash flow. We take this number, we multiply it by 5, and we get 15 billion. We want their long-term liabilities to be under 15 billion. Something to keep in mind also, JD.com has paid down almost $5 billion in the last $4 billion in the last 5 years of long-term debt. So they're doing a good job of paying down their long-term debt. So we go to the balance sheet of our exclusive software. We scroll to the bottom. Long-term liabilities of 4.86 billion. Last year, they did $6 billion in free cash flow. If they had wanted to, they could have written a check and got rid of all their long-term liabilities. This is awesome. So this is I can already tell it's a very well-financed business. They're not relying a lot on long-term debt. They generate a lot of free cash flow, it seems, and they're increasing that and growing like crazy.
Mo, in our last video about Alibaba, we mentioned Singles Day over in China. Paul, they sold 190 million products in 4 hours.
Who? JD?
JD, yeah.
wow.
Grand promotion. So there you go.
That just shows you the potential of these Chinese companies. I
Well,
mean,
why is China so much potential? Why is there so much potential in China?
population and
But more
tech,
importantly,
and this stuff hasn't even gotten there because of difficulties from the government.
Yeah, I was going to
But
say,
not only that, just forget about the population's a big thing.
they can't use Amazon and Google yet?
You know,
Or
it's-
is
It
that
is
it?
the fastest growing middle class in the world.
My dad just texted me this article right now. China takes over U.S. to become richest nation in the world. It's like, yeah, because their population's massive.
See, I wouldn't agree with that statement.
And they have more potential for growth than we do.
That's the thing. By the way,
We're
they're not the
huge.
richest. To me, richest nation in the world would be, where does everybody make the most amount of money? China's GDP per capita is like 10 or 11,000 per person. We're at 60 some thousand.
we're-
Would you rather make 60,000 or 10,000? Now, do I think China will get to? Yeah, but the world pie is getting bigger and bigger and bigger, and our share of it's getting smaller. I'm okay with that because we're still growing. China's expected to grow. Like a recession in China is like 5% GDP growth. That's like a recession.
Yeah.
I mean, that's just so. For all the people out there who are
max.
haters and saying China's going to take over, we took over Britain, right? Guess what? Has Britain done very well in the last 250 years? Just stop being a hater. I really don't like it when people say that because it's always these like negative Nellies who are always like, oh, China's going to be the future. I'm like, okay, great. China should be. Then
yeah,
India.
exactly.
India will take over
India
China
should-
someday
India
because
should be
India
huge, too.
is growing fast too, and their average income is like $3,000 a person. Just do the math. Then it'll be someplace in Africa in the future. Anyhow, I digress. Check out our other videos for my rants and raves about politics and taxes.
Pillar number 7 is free cash
more
flow
double middle
growth over the
fingers.
past 5 years and what their free cash increasing. I'm certain it is, Paul.
And I'm gonna ask you now. Could you please explain free cash flow to everybody?
Oh, sure. Free cash flow is cash from operations minus capital expenditures. And with this money, they can pay down debt, they can buy back shares, they can issue a dividend, they can reinvest themselves, which they probably are, building more warehouses, and they can, I forgot the last one, Paul, but I know I've confused you because I did them out of order. So
Okay, so they can pay dividends, buy back shares, pay down debt, make acquisitions, reinvest back in yourself. Right? So cash from operations less your capital expenditures. We go to the cash flow statement. One thing to keep in mind with our software, if you have our software on Chinese companies, they're not required to report all the same reporting we do. So you have to click on the annual button, not the 4 quarters tab right here. So if you go to 4 quarters, it's not going to show you everything properly. You have to go to annual. So go down here, cash from operations less your capital expenditures. Your Uncle Paul has been so kind to add this extra line for you for free cash flow to make the math easy. 628 to 4.7 billion. That is a check mark. Our next and final pillar. We take the average 5-year free cash flow, 2 billion. We multiply it by 20 to come up with a value. $40 billion. The actual retail value of JD.com is?
133 billion.
So that's an X. And people are going to say, oh, I can't buy it. Not necessarily. Guys, you should be willing to pay more money for a company that's going to grow faster. So now we're going to use our stock analyzer tool, the most popular part of our software. We're we're going to put in assumptions for the future because every investment's the present value of all future cash flow. So your job is to make assumptions about the future, and this stock analyzer tool will tell you exactly what you should pay for the company based on your assumptions, right? So JD.com. Let's do a 10-year analysis on JD.com. We're going to do 3 assumption levels. Now, in the last 5 years, they've done 29% revenue growth. Mo, hit me straight with some revenue growth numbers.
Why don't we put the high side and keep it around 29%? Let's say that they do that for the next, what did you do, 10 years?
10 years.
Yeah. I mean, I don't think it's practical.
So let's look at it this way. What did they do in revenue last year?
For the record, I do not think this is practical. This is to appease the people that think that this can continue forever.
Okay, that's fine.
Would you be surprised they got into healthcare, Paul? They're buying companies, joint ventures with health.
But keep in mind, what did they do in revenue last year?
They're connecting doctors and pharmacies, insurance companies,
last year was
and door-to-door medicine delivery. This is crazy.
134 billion. Yep. That means at 29% revenue growth for 10 years, they would do $1.7 trillion in revenue in 10 years. Keep in mind, Walmart's the biggest company in the world right now. They do around 550 to 600 billion in revenue. So it'd be triple the size of Walmart. Is that possible? Sure. But is it probable? I don't know.
That's why I said that, just to show how ridiculous it would be for you to say,
I'm just trying to show everybody else out there.
Yeah.
So what? Give me some other numbers. Give me a low and middle.
How about 10, 12 and a half, 15?
But you just wanted 29 in there.
I just wanted you to put that in there, and then you did the calculation, so we don't even need to do it anymore.
Well, let's just do this. Let's do 15, 22.5, and 29.
Sure.
Okay, we'll start with that. Profit margin.
You derailed me when you pulled out the calendar, or the calculator.
Or the calendar.
Or both. Profit margin.
And I think profit margin can go up.
It will. How about 468?
I love it. 468. Free cash flow margin.
Same?
Yep, I agree. PE. Remember, the bigger the company, the lower the PE, because you'd be willing to pay a higher premium on valuation if there's a lot of growth potential. So as it grows more and more and more, the potential for the future is a lot lower. So what's our PE?
I think you might argue with this one. 18, 20, 22.
100% arguing with that one.
Too high.
I think it's egregious, but that's okay. Remember, my goal is to be conservative and buy
ultra conservative at times in comparison.
Yeah, probably.
To normal folks.
To me, there's 10,000 stocks out there. I'm going to find 20 to 40 that make sense to me. So I'll be conservative. Now, 18, 20, 22, I'll go with it. Same with free cash flow. Final one is desired annual return, guys. I always put in 12.5% because you can invest in an ETF and not even do any work and get 9 to 10% over a long period of time. So 12.5% gives you good margin of safety, as Warren Buffett talks about. And also, it allows you to have a reason to go buy an individual stock.
Paul, I think you are a YouTube conservative, but in real life, the best investors, Manesh Pabrai, Warren Buffett, this is too liberal for them in terms of buying.
Probably.
Yeah.
Too aggressive.
Too aggressive, yeah.
I like to use the term liberal or...
Liberally spending your money on...
Correct, liberally.
On altcoins, I mean. Go ahead.
Analyze button.
What's the price?
A low of 113, a high of 735.
Wow, what?
Yeah, and it's currently at $86.
Do what?
Yeah. So, let's go to my conservative assumptions, guys.
Do it.
10%, 12.5%, 15%. Profit margin, I'm absolutely cool with. PE, 14, 16, 18, because I think they're going to have a lot of growth potential even after it's still a buy in the middle range. 67, 131, 226.
Paul, I like Baba. JD sounds intriguing. 10 Cent sounds intriguing. Is my whole portfolio going to be Chinese stocks?
So this could end up being one of those times in the future where we look back and say, man, we should have bought Chinese stocks. The concern I've always had about Chinese stocks is the information coming out of China being accurate. Charlie Munger basically vouched for Baba by buying their shares, which made me feel comfortable. I don't care what Charlie Munger's valuations were. I did that on my own. But the fact that he trusted the numbers enough, that made it feel good. If you believe in Baba and you believe, I believe the play is buy both Baba and JD. If you believe in China, you believe these numbers, you buy Baba and JD. Because both of them could still do very well, like Amazon and Walmart and Target and all these things. And I just look at these numbers going.
Has this very analysis right now live changed your opinion of JD? Because we never talk about this company.
We don't. Again, my opinion of JD falls on, do I trust the numbers? If I trust the numbers, I'm absolutely buying the company. Now, here's the other thing I'll say. My middle assumption is 12.5% revenue growth for 10 years. And they're currently doing 138. That goes to $448 billion. I think they're doing more than $448 billion in the next 10 years. So I just absolutely believe this is a buy. If you believe the numbers coming out of China. And with Alibaba, I believed it was a good company back in the day, but I just didn't believe the numbers out of China. I was hesitant until I heard that Munger bought. And I was like, oh, Munger believes the numbers, I believe the numbers too. Which I don't recommend everybody do, but I felt comfortable with that. So I look at this saying, man.
The issue I have with Tencent and JD is I'm not reading any negative thing about them. Like with Baba, people are there's pros and cons. Everybody's bulls and bears on it. With JD and Tencent, especially Tencent, people are just like, oh, it's the best thing ever. It's like, well, where's the counter argument? Why is there no counter argument? That's what makes me hesitant about it. If it was a U.S. company, I'd be a little bit more okay with that.
Yep.
But the fact that I have two things going against the opinions and the China data.
We use our 8 pillars to screen stocks quickly. If you want this software behind Paul, you can join our community and talk about these very topics. Paul, tell them how we get this.
So guys, we created the software because our users kept asking for us to do analysis on companies. They want to do their own analysis instead of waiting for us. So we created the software. You get everything you see here, everything you saw in the video, everything that's coming soon. And you also get it all on your mobile phone through Android and what's the other company?
Apple
through iOS. So you get all that. You get exclusive daily content, 2 or 3 videos per day that we send to you guys that's exclusive just to our Everything Money subscribers. You get access to Seth, Mo, and I. You get 30 years of financial data. But most importantly, one of the biggest things we got is most people felt like they were alone. Like, we have a very, very different view of the world. And if you do too, you probably don't have many friends around you can talk to about it. This is over 6,000 people currently in our chat from all over the world where you can discuss all of your financial ideas, your investment ideas, even crypto. The people are in there talking about crypto. You get all of this for only 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, this would lead to hundreds of thousands, if not millions of dollars in extra gains in your lifetime for only 90 cents per day. Less than a cup of coffee. It's a no-brainer, guys. 90 cents a day, and your price is locked in. 2 ways to sign up, Everything Money or Patreon. The benefit of everythingmoney.com directly is we are not big enough to charge sales tax yet, so you'll save on the sales tax for quite a while. 90 cents a day, go sign up.
And if you want to trade this stock at a quicker pace, Mo, I would imagine the charts are bonkers with all this fluctuations in the past 6 months. Tell me about trading this.
So if we just look at this chart right here, you notice that there's these gaps all over the place. And this is because of all the news and unpredictability that's coming out about Chinese companies. So I have suggested this for a long time on my morning show. Do not go and buy these things long-term yet. Let them calm down so you don't get caught in these massive jump ups and bumps down. So what I would rather do, come over here to a daily chart, and just swing trade it to your heart's desire. Go and catch these little trends in here where you can get these little runs up and down using my rules. Pay attention to earnings today. And just trade this one. Just trade it above these moving averages. Let it bounce off the 25-day moving average. I'm sure it'll bounce back up. If it comes down and breaks through, you can short it. You have some pretty good room to run down to $70. So there's different ways of approaching this. Probably even better, you can come over and do this on a 15-minute chart. Oh, that looks bad. This one is making a good run. Now, Seth, can you see the screen?
Yeah.
Would you be buying this right now on a 15-minute chart?
I can't see my...
No, it's not in the sweet spot.
Perfect.
God, I'm so good.
Your stochastic right now is at 51%. So we need to be above 80%. So even though you're getting this move with engulfing candlesticks and volume, you need to be above 80% because this thing can instantly switch back on you. So these are the rules that will make you successful in trading these companies that just bounce all over the place on a daily basis.
In comparison, can you show us what happened to Baba with earnings in a one-day chart?
On a one-day chart? Yes. So we can pull up Baba and just show you.
If you join Mo in the morning at 9 a.m., he brings you news, analysis, trading, and sarcasm, and people were all over you, Mo, with about Alibaba, their earnings, and what's going on.
Look at this. This is right now. This is one of those gaps that happened. Their growth continued. Everything was working fine for them, but it slowed. So everybody was concerned about it, and you were minus 10% today? Yes, 10% today. So there's a way to do this. You can even go on a 15-minute chart. I bet you could have shorted Baba very comfortably today. Maybe not.
And by the way, I want to make note. I asked Mo recently, based on the charts, what he thought Bob was going to do. He said, I think it's going to touch those 138 numbers again. Mm-hmm. And it's at 144 right now.
Yeah. And it was even lower this morning. It got to a low of, 143? So you can see these. I mean, the support levels are something that they do work. You need to be able to learn how to play them. So if you want to join and learn how to do this, come and join me in the Bid and Ask Nation. You get access to my Trading 101 series, which goes through all the rules on all different charts of whatever fits your lifestyle. You get access to the Employed Trader series, which is 6 stocks that I run through every single day that I will teach you, and we can trade them together. My monthly seminars that are on Saturdays, and the Discord community of 900 people. Come and join me in the Bid and Ask Nation and learn how to trade.
That is our take. We will certainly update you on both companies, JD and Alibaba, moving forward. Alibaba is one of our biggest position, or at least one of our favorite stocks over the past year, Paul. So very
it's my
near.
biggest position.
Yeah,
Currently.
I was going to say that. So final thumbs up. Thanks for watching. Stay tuned. We appreciate your support. See you next video.